everybody, and welcome to another episode of Capital Ideas. I'm Nick Morgan. I'm the founder of ICAN and the co-host of today's Capital Ideas, where we celebrate the innovators and the capital markets who make their ideas come to reality.
And I'm Dara Albright, the co-host of Capital Ideas and proud board member of ICAN. And please join us today in welcoming Jonathan Dunsmoor to the show. Jonathan is a recovering securities attorney and the Chief Development Officer of the Blue Rock organization. Through Blue Rock, Jonathan leverages the power of blockchain innovation along with his regulatory knowledge and expertise to bring more economic opportunity to the masses. Jonathan, it's so great to have you on, and I thought that perhaps you could begin by discussing the economic significance of blockchain and decentralized innovation.
I fell into the rabbit hole of blockchain by being solicited during the ICO era. Everybody was calling up to Buffalo asking for cheaper discounts on legal opinions involving these crazy things called ICOs, and I told them they were all going to jail and this was a terrible idea and what are you doing calling me? But in reality, I had one client who basically said, okay, well then how would securities work on chain? And that was, oh God, that's a good question. So I kind of fell down the rabbit hole there, and that's ultimately what it kind of ended up as my career of, wait a second, this blockchain stuff does really have a lot of benefits. I dabbled in Bitcoin back in the day. But I didn't really see the utility of it when nobody was taking it other than the Silk Road, and nobody wants to be on those lists. And so, once that was proposed to me, it really kind of opened my eyes that, oh my God, this could, prevent the naked short selling that everybody's familiar with GameStop and all these other kind of meme coins or meme stocks. And so, that's really kind of what kicked this off. And then now, as my role as Chief Development Officer and soon to be announced co-founder of the Blue Rock, given all the work that I've been putting behind the scenes, I'm really excited to announce this kind of course. We're going to be using the 65 FINRA's Series 65 exam as a way to allow people to become an accredited investor without having the monetary requirements. And that's really significant because the requirements as they stand right now for a single individual are $200,000, and as a spouse or spouse equivalent right now, which more on that if you Google it, but is $300,000. And so in areas of the country where those numbers are still astronomical, maybe not in New York City, maybe not down in Los Angeles, but in Buffalo, 200 grand is still a lot. And even in South Carolina, people are looking at that as spousely income included. And so this is what kind of really opened my eyes to it, is how do we get more people involved in this economic system? We recognize that it's necessary to grow. We recognize that most of the American economy is involves startups and SaaSes over the last 20 years. And if we don't include those people, then we see the socioeconomic disparity that we have right now. And so we're trying to solve for that.
Yeah, it's interesting. Since we've started, Nick and I were talking about this yesterday, since we have started this podcast, Capital Ideas, almost everyone that has come on to the show has actually had some grievance, all coming down to the accredited investor definition, which is really interesting. And maybe you could weigh in a little bit on how the SEC's accredited investor rule has impacted wealth disparity and technological achievement innovation overall.
It really has. It's created these silos that unless you know someone as a woman founder, as a person of color who's trying to get into the right networks, it really truly changes the game if you can only use 506B, which is the one that allows you for 35 accredited investors and all the rich uncles and friends but you can't generally solicit under 35 or 506B. And so it really kind of creates this really tough economic disparity where a startup has to decide whether they go with B and say, okay, we're going to use our network and we're going to keep it all kind of local. And I joke that you had to have 3 dinner dates before it was considered someone and bring 35 of, if you remember this, 506B is B as in boys. Your 35 boys can come with you, or girls. But that's really limited. And then you're given the option of, okay, now you have 506C as in cat, and that's where you go to the crowd. You can shout from the rooftops, hey, Nick and Dara, you come invest in give me your money because you guys are wealthy folks. I'd like your money, but now I can't take my boys with me. And so that creates this weird economic disassociated incentive of saying, I've got to go reach out to people that I arguably don't know, besides president company included, and find people to invest in me because my network is not that large. And then simultaneously exclude the group who may be able to actually kind of look out for my best interests. You know what I mean? Make sure, you guys have been in the startup world and the securities world long enough that being in a company, whether you're starting it or creating it or anything like that, is really tough early on. It's very tough for your mental health. It's very tough for your financial health. There's a lot of kind of things that it's really good to have people who are, value aligned. Now, does that mean, of course, every time you get a phone call or your boy's going to be asking you, hey, man, how's that startup thing going? Well, there's a trade-off there as well. But I think the trade-off is worth it if you have people in your corner.
There was some reform, Jonathan, I think you're alluding to, some reform to that accredited investor definition for the very reasons that you just described, to try and open up the ability of people to take advantage of certain private placements. And you alluded to Series 65 test or licensing. What are you doing to use that modification of the accredited investor definition, which includes someone who has passed the Series 65 exam, as I understand it? What are you doing to use that reform to make private placements more broadly available?
Yeah. So first and foremost, I failed the 65. I'm a securities lawyer, a former securities lawyer, and I failed the 65. And so when you go to take this exam, understand that this is a tough exam. And this is not going to determine how good of an accredited investor you will be. Even the best accredited investors will tell you that they are not always the best ones to pick the right investment decisions or make the right investment decisions. But there was a rule change as required by the Dodd-Frank Act of I forget the year, but every 4 years, the SEC is supposed to reevaluate the accredited investor rules, see how they work. And to put that in perspective, back in the 80s, only 1% of American households were considered accredited investors. Now it's up to 22%, but that has more to do with inflation than it has to do with economic prosperity necessarily. Now, that being said, in 4 years ago, in 2020, the SEC decided to make a knowledge-based kind of exemption, let's call it, rule modification amendment that basically allowed for 3 exams to qualify for this accredited investor standard. Now, the other 3 are the first one is the Series 65. That's kind of the one that we're focusing on because it doesn't require having a sponsored broker dealer. And so the other ones, if you do take them and you do pass them, you still have to go be a registered representative at a FINRA licensed broker dealer, which is going to be a lot more difficult for a compliance perspective and getting in there. And they're not really going to want to take just somebody who wants to hang the shingle out and be an accredited investor. There's a lot of economic risk related to that. So that's what we're utilizing. We're utilizing something that hasn't really been well publicized. There's been a couple of people that have talked about it on YouTube. There's been a couple articles that have been written about it. But I think with this course, we're going to tell you, how to pass it and how to make sure that you don't try to fail the first time. But we're also going to tell you where additional resources are. The course is free. We're not trying to get anything out of it. We're not going to have any, back end deals with anybody. We just want to show you where all the goodies are hiding. Tell you how to study together, tell you what to watch out for, tell you, good study habits, and then also kind of walk you through a little bit of the process of being registered with your state. Because the difference between this type of registration and the others is that you would register with the state. You would still have an SEC kind of file, but you're primarily dealing with a state regulatory agency.
But the general concept here is to allow people who might not make the financial metrics of net income or asset value by going through a course where someone passed a Series 65, they could become an accredited investor, even if they fell below the income and wealth requirements. Like, that's the idea, right?
That is the idea. It is a legalized loophole that they've, amended the rules because they recognize the rules don't necessarily fit, what the economic models show.
Right.
And there's some really good articles about how, the accredited investor standard is not necessarily the best standard. And if if wealth alone was able to determine how successful people were in investing, then nobody would have any losses, right? And so I think that this is going to give people a lot of opportunity that they would not normally have, either meeting the salary requirements or having that net worth of $1 million or more, excluding your house and debt obligations. So, this is just one of those legalized loopholes like we're just pointing out.
Right. And I would say, I mean, the word loophole has sort of a negative connotation to it. I would say it's the full compliance exception. I mean, you're doing what the rule ostensibly wants to have happen. Educate people. That seems like a good
That's
point.
true.
Yeah.
I do wish the SEC would have talked about it more. That's the only reason I feel like calling it a loophole, and it makes it a little sexy of saying we're using a loophole. But yes, you're absolutely right. It's completely legal. There's nothing that's going to get anybody in trouble as long as you file everything and don't lie on forms. Trust me, never lie on a government form. That is legal advice. Don't ever lie on a government form. They will find out. And so, yeah, I mean, I think that this is going to be what kind of, especially in the Web3 community, because we're still so early, really kind of gives us the advantage. We are a community as opposed to kind of the capital markets communities. And I hope that, the cap markets pick it up. We do, have people who are going to push this out to them. But I think if you get, a group of friends or online friends or whatever your friend group is, and you start kind of, working on this together, eventually you will have those monetary requirements met, and you won't have to worry about reporting to FINRA or reporting to your state regulatory agency. But in the meantime, this is how you can get there.
Right. Well, you raise a good point that the licensing, the Series 65 licensing option is a great step in the right direction. But I think what you're suggesting is maybe there's more reform work that needs to be done with regard to the accredited investor definition. And just, in the interest of full transparency, ICAN has a pending rule petition with the SEC that has been pending now for quite some time. And so, we agree there's more reform that needs to be done. Anything in particular you think the SEC ought to look at in terms of further reforms in this area?
Mike Flood of Nebraska, I've got to give him a shout out because he really tried to do the best he could with getting, a proposal through the House to say, hey, we need to have an accredited investor test or series of tests that allow people to, utilize what may be their, existing knowledge, but not necessarily their financial bank account showing, that knowledge there. And so that's really where I think, we could possibly get some exciting movement. Now, unfortunately, it looks like it's kind of died in the House. And it being the political season that it is, I won't take that up. But I do think that if we could focus on that and, especially maybe as more people take the 65, we can create working groups and start talking about, hey, what does make a good accredited investor? What does make, these successes I've had related to, actual knowledge or experience as opposed to, just testing about things that don't necessarily make sense. Most recently, speaking of being a lawyer, the logic games have been taken out of the LSAT, the law school admission test. And so that's one of those kind of, the numbers don't lie. If the numbers don't lie and they don't make sense, you shouldn't trust them, or you should dig deeper into the numbers and see why they're not working. And I think with this, we'll have enough data. If enough people take this and enough people, report back, and we start getting in these working groups, that we can really kind of drill down on what makes a successful accredited investor. And the exciting thing about that that means that the U.S. will not only have that economic advantage and building on Web3 and truly creating these, more diverse communities, because they're made up of people who, may not have had the financial opportunity to succeed to, what the government calls success. And those communities are then going to be more empowered to kind of build within the community. And that just, to me, is really going to be what revolutionizes this. You're going to start seeing up new incubators that actually make sense, and global incubators and things where you can see that people have made those investments. So that you guys are real accredited investors because it's possibly on chain. And so that really just, I get goosebumps, guys. I really do.
Well, we love your enthusiasm, and I really like the ingenuity of the Series 65 courses. I think that's a great idea. And Dara, maybe we'll leave it there. Jonathan, thank you so much for joining us. Dara, great to see you. And for everybody else, we'll see you on the next Capital Ideas.